Good morning, everybody, and this is your Dow Jones Day Trade setup for today. So breakout has happened, and breakout we were looking for was something down there. It flew through there on Friday. Didn't really give us any opportunity to jump in, and pure result of CPI data coming in worse than expected. So inflation fears are rife, and I think we're all seeing it at the moment with fuel prices, food prices. There's so much going on around the world. Every country's got the same problems at the moment, and central banks are now frantically trying to plug the holes and fix up the mess that they created with the COVID situation, by locking down and paying stimulus checks and etc. etc. Anyway, so what we do have is a pretty clear break. Oscillators are grouping to the downside below the 20, so that is extremely oversold. Not something that I would like to be jumping into. One thing to bear in mind is there is a potential island here, and I would look at that from we can't look at it on a weekly perspective, but if you look at it on a daily perspective, you'll see it. There's a gap there, and we've got a gap here. So the moral of the story is quite simple. If I just come back to 8 hour, if we don't close this gap this week, then and we sort of close the week with a gap here and a gap there, that becomes a potential island reversal, and island breakout, should I rather call it. That would be 1,935 points. That's a 6% move, which you would expect another 6% move to the downside. Roughly looking for 29,400. Okay, so just keep that in the back of your mind on the bigger time frames. But with the oscillators like they are at the moment, I suspect we are a little bit tired at the moment. Okay, so we do have a little bit of structure here. And actually, I just want to go back to the weekly because this is the interesting part that we need to pay attention to. So there is the weekly level that we've just broken below, which is 31,317. And then I just want to get the underside of that. You can see there were quite a few weeks here. You had 1, 2, 3 weeks in, down, up, and then retested that area. So that's another area. And you can see we've come back to test it here as well. So that is 3620. So let's just get back to the 3 hour quickly. And what you're going to see is quite a bit of structure here, and for the sake of not making everything messy, there is the first bit of structure, and you can see we sort of rejected it going into the close. I don't trust that because this last one would have been sort of after market closes on a Friday. So that's one of the areas I'd be paying attention to, 31,587. And you can see how it was tested on Friday. So 31,587, and then obviously the gap, and then this area here, 31,317. So even on the hour, look at the oscillators. It's not a place you want to be jumping in short. Yes, it may continue drifting down, but if you're trading off the hour, you need to wait. You need to wait for a pullback onto structure, wait for the oscillators to come off the bottom, anywhere in the middle to the top, and then start rolling over. That's going to give you the opportunity to get back in for the short. At the moment, if you are holding short, I'd basically just be moving my stop down at the moment. Wouldn't be worried too much about a reversal just yet. If you look at the 15 minute, and this is the same picture on all the markets at the moment, have a look at the intraday gap that we've got there. So you can see we're just hovering along, just meandering along, should I say, and then we had the CPI data come out and we sort of plummeted based on that. So at the moment, oscillators crossed over far apart. This is indicating another move to the downside is brewing, which is probably going to happen during the European session. The trick is going to be trying to catch this. I think you're better off just catching it on the DAX, because the DAX has got a bit of structure. And I suppose there is a little bit of structure here, and I'm on the 5 minute chart now. And you can see there's a bit of structure. You can see how we're rejecting it. So it's going to be interesting to see what happens when we open with this area that we're in. And I'd actually just add another level there. So break below here, 31.84. You can probably have a 100-point stop loss, which should be safe, and then you've got a pretty big move to the downside here, a potential 400-point move. But I'd just be very cautious with that and small position size, because it could go either way, to be honest, especially when you start seeing the higher time frame oscillators like this. So yeah, I'd prefer a move back up to 31,587 to the gap here for a rejection. There's a nice little, if I just move that up, there's a nice bit of what was support there as well. So 31,434, 31,587. I'd prefer to move back into that area for a rejection and then a continuation down, but it may not happen. You may just get some kind of a rejection between these two little levels that we're bouncing at the moment, come back and test it, and then a move down. But that's going to be a 5-minute trade. So if you've got time to watch 5-minute charts, you're going to have your stop above, and you're going to wait for a take profit down here, or alternatively when you see price action starting to form some kind of reversal pattern. But anyway, that's kind of my view at the moment. Definitely move with the downward trend. That's what you need to do. It has been verified on Friday, so that's kind of the move you want. But what you need to keep in the back of your mind, if we just come back to the daily, is it could also be a massive range that's forming. You can see how the buyers came in here in the previously. So I don't suspect it's going to drop below that. It's going to have to get well below 36.20 and retest that for me to believe that we're going to continue to the downside. So at the moment, this is still a higher low from this previous swing low of last month. That's kind of where we are at the moment. So just keep that in the back of your mind. Okay, anyway, that's kind of me for today. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.